What's up, guys? Welcome to Oz Wealth and welcome to another video. What a day in the stock market today. The sell-off continues, particularly the sell-off in the tech sector. The Dow is up 1.55%, the S&P 500 is almost flat, the Nasdaq is beaten to death, minus almost 2%, and the Russell about 1% of a gain. When it comes to the sector, financial is up 1.9%, followed by materials 1.8%, utilities, all those recession defensive stocks or sectors 1.77%, industrials 1.5%, real estate almost 1%, consumer staples 0.7%, energy continuing to rally, consumer discretionary. I'm surprised consumer discretionary as a sector is still in green with a big sell-off of Tesla, which is part of this industry. It's kind of weird. The healthcare, the Johnson & Johnson, the Pfizer, the Moderna, all getting their vaccine ready and exporting them overseas. And the only two sectors ended the day in red are the communication services and the information technology. As for my Robinhood portfolio, as for the day, we're down, as you see here, 1.55% with $63,206. And for the week, we're down 4.8%. I'm really heavy on Apple and Tesla, as you know, guys. This is almost 50% of my portfolio. That's why we're seeing a lot of trending downward for now, for short term, but for long term, we should be okay. For the months, we're down 8.45%, and for 3 months, we're almost flat. For the 1 year, we're up 21%, and for overall, we are up 21% as well. As for my Robinhood holdings, as you see here, we're down today. We started the day at $63,959. Went down and up, and then to the middle of the day, we went down a little bit, and then the trending downward started. As I mentioned earlier, Tesla and Apple are almost 50% of my portfolio. And with the huge bull market we're living in right now and the trending downward and the huge sell-off in the tech sector particularly, my portfolio is going through some critical time. I'm not worried about it short term, and I'm sure everything is going to be okay long term. I don't look at it as a time where we need to be careful in the stock market as of taking advantage of this lucky time we're living in where we can get things on sale, especially for Tesla today. As you see here, $567 ending the day, and Apple $116. I mean, this is like a discount like never seen before. We bought 2 shares of Tesla. Actually, we bought 3 shares of Tesla, rounding the number of Tesla to 25 shares in total. And then we added 10 shares of Apple, getting our Apple shares to 110 shares. And we are going to buy more if the market continues sliding down. What a great time we're living in right now. Intel is down today almost 0.6%. ARK is one of those ETFs that also on the top of the waiting list, ready to be loaded up with some shares. But based on what we saw today, and also we're expecting the Congress to sign off on the stimulus check tomorrow, in the middle of all this positive news coming, the stock market is still not responding well. And with the interview of Cathie Wood today coming out on Bloomberg, talking about how investors are moving their funds from growth stocks to value stocks, and how much that is going to change the market and the circulation in the market in general. It was a very interesting interview. I will leave the link in the description below. As for SPHD ETF, ended the day almost 2% up. This ETF is finally waking up. AT&T, as we reach to 200 shares, right now we really don't care if going down or up a little bit. This stock been on a sleeping mode for a while, and we're ending the day at 1.15% up. We're kind of finally getting some momentum here, and we're expecting a big chunk of dividends coming with AT&T next month. Hopefully it's going to be like around $110 based on the 200 shares that we own. Realty income, the 100 shares we own are going to give us $23 in 5 days in dividends. LTC is up today 2.82%. Stag is up 1.2%. almost 2%. AGNC is almost up 3%. Main Street Capital and the financial in general been soaring today, 0. Almost 0.5% up. Johnson Johnson 1.4%. Bank of America almost 1%. American Express continued to soar 3.17%. Caterpillar $222. We bought Caterpillar when it was $109. I wish I had more of Caterpillar. Coca-Cola, the top of the list, also on our waiting list, ready to increase those shares. But when we see like Apple around $116, when we see Tesla around $550, it's just more enticing, it's more attractive to go after those growth stocks, taking advantage of having the tech stocks like Tesla and Apple going down is just irresistible. We're going to go back to focus on the dividend stocks like Coca-Cola, like Cisco, like Altria today scored like really high with almost 3% up. As we are dividend investors here, and that's our main investing strategy, investing in blue chip, boring dividend stocks that provide income. That's what we do here in Oswell. Keep buying income producing assets like those dividend blue chip stocks. Philip Morris is up almost 1%. ExxonMobil and the energy in general is also up, and ExxonMobil finally crossed the benchmark of $60. Pembina $28, almost $29. Con Edison is almost 2% up. Hormel Food is 0.38% up. As for my main dashboard here, we're standing right now at $81,763 after buying 10 shares of Apple and 3 shares of Tesla. This is a number that I've never seen before here in Oswell, so hopefully we can get this to 100,000 in the next 3 months, especially if the market will have a quick reversal. So, and as you see here, we are up in our dividends to $2,164. If you go to the income, we'll see that Apple is going to be sending us $22 quarterly with a total amount of $90 annually. As for the dividends that we're going to receive this month, tomorrow we're going to get $11.41 from AGNC and Johnson & Johnson, and then $47.85 from ExxonMobil. And then 5 days later, we're going to receive $57.43 from 3 different companies: Con Edison, Main Street Capital, and Realty Income. Bank of America is going to send us $5.04 on the 26th, and on the 31st, LTC is going to send us $5.70, and SBHD also is going to send us around the same time. And then on the first, Coca-Cola is going to be sending us $2.94. We're thinking maybe if we add 20 to 30 shares of Coca-Cola, that will spike this number to $25. So let's see how tomorrow is going to go. If the tech are going to continue on the sell-off trending, we're going to buy more of Tesla and more of Apple. If the tech sell-off season is over, maybe we're going to shift toward the blue chip, the dividend stocks like Coca-Cola and Cisco. Philip Morris is also going to send us $7.20 on April the 9th. Going back to the main dashboard here, as you see here, HSA stands at $3,691. Robinhood is at $62,852. And Roth IRA, we're standing right now at $15,219. As for the Roth IRA, today we added $1,000 to buy. We invested $1,000 in SWTSX, the Schwab Total Stock Market Index Funds, getting our shares in this index funds to 51 shares, 0.9109 at average cost $59. And from now on, we're going to direct our investing toward the total stock market index funds from Charles Schwab. I used to be a big fan of the S&P 500 when I first started investing. As you see here, I own most of the shares, 126 shares in the SWIBIX, the Schwab S&P 500 index funds, and has the biggest number here, $7,418. But as we made the comparison between those two indices, it was surprising how the total stock market index fund is beating the S&P 500. And we're not going to be adding anything in the next coming months toward the international index funds or the bonds, since The bond and the international index funds are kind of not secure for now, so I'm okay with 2,000 each. But by the end of this year, and when we can max out our Roth IRA at the end of this year, this should come up to almost $7,000 or $8,000 to beat the SWPX index fund. As for the dividend growth in our portfolio, it's about 4%. And as for the diversification breakdown, after adding 10 shares of Apple and 3 shares of Tesla, the information technologies by Apple now is taking the lead at 25%, followed by Tesla 25%, real estate 16%, communication services 10%, financials 9%, energy 8%, consumer staples 3%, utility 1%, healthcare 1%, industrial 1%, and we don't have anything in materials. When it comes to the income, AT&T is still taking the lead of sending us the most amount of dividends. At 20% of our dividends comes from AT&T, followed by Realty Income, then SPHD 8.9, Exxon 8.8, Schwab S&P 500 6.1, Main Street Capital 5.7, Pembina 4.6, Apple finally entering the list with 4.2, AGNC 3.5, and Stag 3.3. So this is what we have here for today: $81,763 and $2,164 in dividends. This is where we stand. I would love to hear what you think, guys. Thank you so much for those new subs. We really appreciate your support. I would love to hear your opinion about how the market is going to go. What stocks are you interested in?
That's it, guys, for this week. If you have not signed up to Robinhood yet, links are in the description below. You can get a free stock from Robinhood. It's a win-win deal. And if you have not smashed the like button, please do so. You can kick it, hit it, smack it, do something to it. It will mean a lot to me. And if you like the content of this channel in general, please consider subscribing and hit the notification bell. And until next time, you guys take care.